Thank you. So just half a minute about GreenSoil. We exist 4 years. We focus on technologies where we try to achieve resource efficiency in two main sectors. One is in agro and food. We started in Israel 4 years ago. We have about $31 million under management in ag and food technologies. Last year, we started a second fund in Toronto, which is focused on another sector, which is building innovations. There we focus on efficiencies in building innovation, in real estate efficiencies. And we are actually just now starting our next fund, which will have the same office in Israel and the second office in Amsterdam. We're going to invest in Europe as well as in Israel. This is our ag and food team. Most of the people are here in the room, mostly here on the second row, just if you say hello. From our Amsterdam office, Matthijs and Judith, Rona here from Israel, the class here. So just about the panel, and you've seen these numbers, I think, now in 4 different presentations, so I'm not going to repeat whatever has been said already, but basically this is summarizing what we're looking at. At one side, we see the caloric intake, which is increasing a lot, but it's only part of the story, because it's not only that the people are eating more, but also the way they eat and what they eat, which means that not only the people are eating more, but also the meat we're eating, so the cows need to eat more, and there's a huge demand increase in food. So we see the world population going up. We see, on the other hand, the arable land being quite stable over time, which means that the arable land per capita is decreasing. And the only solution, of course, is technology, and that's what we're all looking for. And that's what these panelists are all investing in. So these are a number of different areas we're all focused on. And in this panel, what I would like to do is introduce mostly foreign investors that came specially to Israel to look at the Israeli scene. We're going to talk about what areas are the most interesting ones, why they are here in Israel, what they're looking for, and the way they are investing. So let me please call upon the panelists to come on stage. Adam Anders from Anterra Capital, Dror Berman from Innovation Endeavors, Arama, Kukutai from Finistere, Michael Lee from Syngenta Ventures, and Jinesh Shah from Omnivore Partners. But let's start with a small introduction. So why don't we start with you, Jinesh? What I would like to hear in 2 minutes is a little bit of your own personal background, why you choose to invest in this area, your fund, what you're looking for, and why. Please go ahead.
Hi, good evening, everyone. Thank you for inviting me on the panel. I represent a fund called Omnivore Partners, which is India's first agriculture technology-focused fund. As a fund, we focus on investing in tech companies in the startup phase, which is really focused on small-scale farmer innovation. I mean, globally, most of the tech innovations is happening where focused on large scale of large land holdings or large farmers, but 45% of the world is represented by small farmers. And my country, India, leads the way, right? We have 125 million small farmers, and we're trying to find technology solutions which can help those farmers. We invest into 6 sub-sectors. One is farm tech and mechanization. Second is what we call is IoT and precision agriculture. We club that too in Indian context. Third is big data and information services we play in India. Fourth area is sustainability. Fifth area is investing in technologies in supply chain logistics solutions. And sixth area is food innovation, food companies. India has 1.25 billion population, right? So if I can create food companies, it's a great market. Yeah, thanks.
Well, good afternoon. Thanks for the warm welcome, Gideon. My name is Arama Kukutai. I'm a partner and one of the co-founders of Finistere Ventures. We're based in California with offices in San Diego and also in Palo Alto. As you can probably tell from my accent, I'm not an American. New Zealander originally, grew up on a farm, dairy farm in New Zealand, and really was an investor and developer in farm and agriculture companies before becoming a venture capitalist. And we just recently closed our second fund, focused in the ag tech space. I guess Jinesh has covered a lot of the key areas already, but I would just say, really, in addition, we're looking for world-class teams. I believe, the best companies get built by the best entrepreneurs in this sector, just like any other. And ag tech is an area that's obviously got incredible excitement. I think a lot of momentum behind it, and I think delighted to be here in Israel, particularly since there's such a great cadre of new technology companies. So thanks for the invitation.
Hi everyone, my name is Dror Berman, and I'm the founding and managing partner of Innovation Endeavors. I think I'm the only one on the panel with Israeli accent as well. So I run Innovation Endeavors. We're based in Tel Aviv and Palo Alto. It's very much a thesis-driven fund. So what we do is we try to look at what kind of emerging technologies, such as big data analytics, genomics, robotics, and so forth, could now be applied into different markets and basically build thesis and invest based on that. About a year ago, we started to look into agriculture, and we found that there's a set of those technologies that is quite interesting, can now change the space in a pretty big way. And so what we did was we created a collective of about 10 companies now, all across the value chain of agriculture and food technologies, and we set out with a mission to feed the world by 2050 and advance the ecosystem. It's been a quite interesting journey, and we've learned a lot over the last few months about that. Other than that, we've been working a lot on sort of this bridge between the Silicon Valley and Israel. That's one of the big focuses of the fund that we set since the beginning, and we've been very fortunate, very happy to work with a lot of Israeli entrepreneurs.
Thank you, Gideon. My name is Adam Anders. I'm the managing partner of Anterra Capital. Anterra is an Amsterdam-based investment fund focused solely on innovation in food and agriculture, in line with the themes that were mentioned. Also, you perhaps recognize by my accent, I'm also not Dutch. Also by my height, I'm not Dutch. But we have a global mandate in terms of our investment, but clearly it's most responsible to be investing in regions where we have close contacts or a team. And in that context, we're backed solely by Rabobank, the largest food and agriculture bank in the world. We work hard to leverage their presence and their 100 research people and customer base to help accelerate the growth of the companies we invest in. And more recently, we've got a co-lead investor in Fidelity, and the part of Fidelity that backed us is the group that has a series of captive technology funds and a series of captive life science funds. And they felt that there was a white space in their investment environment that was the gap where they weren't confident to make a food and agriculture investment, but they felt the opportunity was there. And we shared that view, and they have offices that we could work with closely in, of course, Boston, the home, but also Shanghai, Beijing, Tokyo, Delhi, London. And so that's a little bit of our story. We're looking for a collaborative approach to accelerate the growth of food and agriculture companies.
Good afternoon, I think it is still just everybody. Michael Lee from Syngenta Ventures. We're a team of about 10 or so people with a variety of different backgrounds. I'm an insect scientist by training. Don't test me on my science, I've forgotten most of it. But we're looking for technologies that fall into approximately 3 buckets. So R&D platforms, product-based companies, and then this peculiar but very interesting bucket called adjacencies, which I think is why there's quite a lot of excitement about Agritech at the moment, because all of these different technologies are chasing agriculture. I think I should also add that not only am I pleased to be sat on this panel, and I'm actually hoping to listen and learn more than I'm going to speak, but I'm delighted again to be back in Israel. There's quite a lot of energy and interesting new technology companies, and it's great to be here and see so many of them here today.
So I hope that for the time being you're not being too confused with this Brit out of Switzerland and the Australian from Holland and the Israeli investing in California and in New Zealand in California, but whatever. So what I would like to maybe start off with, because you all mentioned that you are investing along the value chain. So I'm going to challenge you within that value chain. What do you see coming up as the 1 or 2 most interesting areas? Maybe start with you, Jinesh.
In Indian context, I mean, we're seeing few things, which is trend which is happening out, right? For the first time in history of India, we have farmers using smartphones. I mean, my country has 250 million mobile users which working on smartphones, and 30% of those users are in rural areas. That's farmers. So we're seeing a lot of technology and a lot of innovation where there is a confluence of information technology where India is having a great talent. So some kind of convergence with the agriculture technology. A lot of happenings the farmers have learned over the years, and we are learning from the Western world. And that is where we are seeing. I mean, it's a combination of telecommunication, mobility, and that is where we are seeing a lot of trend, and that's where a lot of innovation is happening in Indian context.
So for you, it's really to look for technology that can be applied in the Indian market, or are you also looking the other way around, looking for Indian technologies that can go into...
So from our perspective, we look technology in two worlds. Right? There's a lot of innovation being done in the Western world. Right? We look, it's being done for some set of farmers. Can we Indianize those technology and take it to people which is not being targeted right now? At the same time, we look that India is a laboratory for a lot of problems which Southeast Asia is facing and a lot of problems with Africa is facing. So we see our portfolio companies getting in the second and third year of their life, getting into countries in and around India, that's Indian subcontinent, the Southeast Asia, and getting to African continent. So we learn from both parts. We learn from what's being done in the Western world and then see where we are having our own strength. So that's what, and we're currently exploring, a couple of portfolio companies are exploring to invest their money in companies where you can learn from those, technology companies.
Arama, maybe you want to add specific sectors you're interested in, subsectors?
Yeah, maybe I can firstly just comment, I think, around key investment themes for us. So, I think it'll be unsurprising to anyone in this audience who's been following ag tech that productivity remains a critical driver of thinking about where value is created in ag tech, and that's certainly a key driver for all of the big six and big ag companies. But I think we're also increasingly, especially in the Western world, concerned not just about the quantity of calories that are produced, but the quality of nutrition. And so we're certainly interested in technologies that are going to improve the overall, whether it's health, benefit, or effect of food, and certainly also the way in which food is produced in the value chain, which leads to really the third key theme of sustainability. We're losing 20 million acres of agricultural land in the world every year. We face significant challenges or significant headwinds in continuing to produce and provide safe and abundant food, not just for the developed world, but for the developing world. So technology, I think, in the ag technology sector has really very significant tailwinds helping it in terms of the ability for, if you like, technology to transform the value of land and obviously the productivity and quality of land out there in the world. So I just say as a final point, having come from a farming background, I think, actually when you look really at how ag technology is deployed, ultimately farmers are looking for solutions to help them more sustainably and profitably manage their land. But also when you apply technology to land, you have an opportunity to change its value, which is why I think we're seeing also, not just in our space here in venture, but a big uptick in private equity and really in direct land management, land investment that's occurring. And maybe one final point on that too, in the US, a third of the farmer population is over the age of 68. So there's a seismic shift.
And going up.
And going up, right. So the average age is 58, but a third are at retirement age, technically. So there's a seismic shift that's going to occur in the way in which land is owned and managed, and technology is going to play a huge role in really defining how well that outcome turns out.
So Dror, you're here amongst a bunch of funds that are really focused on ag and food tech. Probably there are a dozen in the world that have a minimum amount under management. Background of your fund is of course more general high tech, and you're also in an area in California where you see more and more generalists going into this area. So first of all, why did you choose to do that? And second of all, do you see this process going on? Are we going to see more of the, I call them the general funds coming into the space, and what are they looking for differently from what we are looking for?
Sure, and I would say that we're also a little bit of a different fund than a general fund. So our background is, the fund was started by myself and with Eric Schmidt, the executive chairman of Google, and the whole theme was, let's try and actually find what kind of technologies could be applied today into big markets. And in our research, we found agriculture to be one of the more interesting areas. And specifically, in sort of tying back into the previous point, we think that the biggest revolution we are seeing, on the most interesting area, is really related to data. We would like to see farms today more like factories, right? Like unoptimized factories. There's a lot of variable data that is very hard to measure, very hard to optimize, and for the most part, it's really unpredictable. And there are actually two emerging technology trends now that are coming into play. You know, one is declining cost of hardware, specifically sensors that could now be deployed in the field to measure and sort of get a lot of the unstructured data that you can now capture and structure. And at the same time, there is the emergence of cloud analytics that allow you to process much larger amounts of data and really help to really help farmers get real-time, sophisticated decision making, right? And I think this combination has been very, very interesting for us, along with another trend, which is what we call capex replacing opex, right? As labor is becoming older, there's more opportunity for automation and robotics to be deployed in the field. So we've been coming to that just by thinking about what kind of emerging technology trends could now be deployed in that field. As you think about the market now in the US, I think I'm not sure that is the case. I mean, you do see some of the more general funds, you know, especially the big ones, come into play in the agriculture market. I think it's still pretty marginal. There's not that many of them, and most of them are very focused on very specific areas like finding plant-based proteins that could replace the animal-based proteins and so forth. And it's very small, very concentrated. I think jury is still out, and most of them are looking to see if the two things that they're looking for: A, you can actually build a big company, and B, you can actually build it within a time frame that fits their thesis. Once you start to see that, and I think you'll start to see that more and more now, I think more and more of those value funds are going to do that. I don't know if you want to talk about it later or not, because but I do think it's actually a very good thing that happens.
So Aram, just going back to you, because you're also based in California, what's your experience of doing investments together with again, I call them the generalists, and do you think that they will come more into the space?
In brief, I think the answer is yes. The experience, it varies. It's hard to be, I think, specific about or categorize such a diverse community of investors into one big lump. If you think about it, California has more venture capital deployed than all the other states put together and has 60% of the world's venture capital. So you can't really compare that ecosystem to any other, because there is no other ecosystem like it. We're really the only ag VC, pure play VC based in California, but we see a huge interaction between our fellow colleagues, like the group that's assembled here and others that are in the space. And I think we've found some very good generalist groups. I think what we do when we call also, by the way, some of these world-class venture investors generalists is we're really belittling their experience in technology, which agriculture has really been a cannibalizer of technology. So we've really, and this has been a good thing, we've basically grown ag productivity off the back of other people's cost curves. So we didn't invent genomics, but Syngenta benefits from it, so does Bayer, so does Monsanto. We didn't invent GPS technology, and yet it's ubiquitous in agriculture like it is in pretty much every other field. So what I think we're seeing change is a level of direct risk capital investment, and it's really only occurred in the last 3 or 4 years. So, I have no complaints about our generalist partners jumping in here. The more the merrier.
Adam, you're I think I can say a true globalist. Your offices are in Amsterdam. You do a lot of deals in the States. I think you've been here in Israel already a couple of times. So first of all, where is Anterra's interest regionally? And also, what are the differences you see between those three regions, the States, Europe, and here in Israel?
Okay, certainly. So our interest is, clearly it's great to find good deals close to where we can service them properly in Europe out of Amsterdam. We'll also hopefully soon be opening or having a bigger presence in the US because we've got a couple of portfolio companies there. But to date, we've always invested with a strong local co-investor to cover that distance in communication and I would say responsible investing and being a strong partner when shit happens, which it always does. And then as far as our approach to Israel is concerned, I think, well, first of all, the States has got a fantastic environment, as you mentioned, Arama. So you always get great presentations, even from bad companies. You get great presentations from American entrepreneurs. So clearly that's going to be a good source of at least the first 3 weeks of joy.
You really have to read them.
Yeah, you have to read them, and the presentation is slick. And I would say Europe suffers from exactly the opposite. They're relatively poorly presented and often poorly prepared. But I guess the other problem in Europe is a successful European entrepreneur is quite likely to become a very successful retired single-digit millionaire, right? And in America, that's just not enough. And that's a major structural problem for European venture capital, full stop. Experienced entrepreneurs going the second round. So I think we'll see more European technologies coming to America. We'll also see the technologies being applied in other countries. It's a global market, food and agriculture. And America is a common, large market, consistent, or not consistent, but more consistent in Europe in terms of its regulation. Israel in that picture, and comparing perhaps against some of the same parameters. First of all, there's a fundamental need for food security. There's a fantastic, and in relatively challenging conditions. So it's a great initial platform. Second, it's a very mature and experienced entrepreneurial environment and venture capital environment, which is fantastic in terms of generating a good deal flow, but also people who know how to present. And I think within that cluster, and some of the technologies coming out of, for example, be it technology sector or if defence or wherever the innovation comes from, I think it's going to be a hotspot for the agtech revolution or transformation. And to that extent, we'd like to be co-investing or investing here. I can't tell you we're going to open an office soon, but I can tell you we're very keen, and we're not here just on a one-off visit. I hope we'll be back often.
Or just for the beach.
Yeah, just for the beach.
He has the lousiest hotel farthest away from the beach. So you spoke about Israel and about the advantages of, and because we're in my living room and nobody's listening.
Yeah.
What do you see the challenges of investing in Israel? Where do you think the Israeli entrepreneurs need to
That's a good question.
maybe improve a little bit?
Look, they are, in general, the ones that I've met so far, extremely well prepared for the conversation. So they have that American entrepreneurial and clear proposition and clear PowerPoint piece going perfectly. I would say extremely aggressive, and also aggressive on pricing.
Israelis?
Aggressive on pricing, aggressive on speed of the proposed process, aggressive on expected exit and milestones. And look, the Americans perhaps are quite adjusted to that and used to it.
We can push back a little bit so when they start throwing tomatoes, we don't get hit.
Look, that's fine so long as you can deliver on it, but it does slow down a little bit of the conversation, particularly for the European side. The Americans are perhaps more used to it, but I always find it a little entertaining after I jump off the phone compared to what a Dutch entrepreneur would present in terms of their business versus, say, an Israeli at the same stage with the same proposition.
Right. So, Michael, I was going to ask you a question, but you said you also only wanted to listen and not talk. So
I'm just going to listen. Yep.
So you can return the microphone. Now, I am going to ask you a question. So of course, you're here from with the strategic look at investment. So are you only investing in stuff that's interesting for Syngenta? Maybe question number one. And question number two, I mean, it's always a debate. Is it good to have a strategic investor on board or not, and at what stage?
Not an easy question. No.
Okay, Adam. No.
So it is good to have a strategic investor, and Syngenta will only invest in things that are broadly applicable. But I think one needs to understand that we can, if we're willing, and we are often willing, we can make broadly applicable very broad. So by way of example, we closed a deal in a company which some of you have heard of in the American side, Planet Labs, which is a satellite company. So, that, at face value, that's not necessarily a company that's directly related to Syngenta, which is a seeds and agrochemicals business. I invested in a company which is in mobile marketing, essentially as a way to reach smallholder farmers. Again, it doesn't make seeds, it doesn't make chemicals, but it's broadly related to agriculture. So we, I suppose, are a beachhead into the future, is the way I like to describe it, for Syngenta. And some of those punts won't work out for agriculture in the way that they might. But they may still be very successful companies. And I think the challenge that we have as Syngenta Ventures is when they pivot away from that possibility that they were relevant for agriculture, how do we handle them as investee portfolio companies? And I don't have the answer for you for that one.
Adam, I saw you were jumping up when we started talking strategic investors. From your experience, advantages, disadvantages, when would you recommend a company to take on a strategic investor and when not? And if you want, you could first go to another chair.
Yeah, no.
Look,
I think strategic, the role of the large players throughout the value chain, be it at the ag inputs level, or be it at the trading level with the dominance of the cargoes and the ADMs, or be it at the retail level, they are, perhaps you could call them, if you wanted to be negative, a necessary evil, but I'd like to call them a valuable collaborator. But you've just got to be careful that you can balance the... there's two elements here. There's everyone knows to balance the actual idea that you might have a strategic investor have its foot on your neck or be in some way compromised in terms of your business model or your strategy or your exit. The second thing to be just as careful of is that perception. And the perception is very difficult to counterweight if you have a strategic investor on board. So, my advice is definitely take a strategic investor, but make sure you have an equally strong, independent financial investor so the outside world knows for certain that there is a clear channel for communication and a clear focus on, say, exit, and you can keep that perception alive. And, and in terms of which stage, I would say, for all young companies, the later you take on even the devil that is independent venture capital is sometimes a good idea. And I would say the same in terms of taking on the strategic investors, because we come with benefits, but we also come with a lack of control and different decisions. So engage early, partner with us early, talk early, but you don't necessarily have to take our investment and all our conditions early.
Arama, sorry?
I'm going to have a shot at that one as well. So it is a good idea. Obviously, I'm going to say this. It's a great idea to have corporates on board. But you do need to be mindful of a couple of things. So the thing that I think that a corporate venture capitalist can bring that maybe these minions over here can't bring is... I'm referring to you all. Is scale and distribution. So if you can wake up me and distract me away from the other the portfolio companies that we've got, then I will try my level best, certainly if I'm an investor, I will try my level best to open doors for you to other parts of the Syngenta organization, which may lead in turn to something real and real sales for the business. I think it's important as well to try and balance that scale that a big co has, which is what you're looking for, with the agility that you guys have as the entrepreneur in the small business. And that's nirvana. If you can combine those two things, the sluggishness I think that was referred to earlier by the big companies. I think it was it Dupmatu that mentioned the I used to work for Unilever, which makes Syngenta look fast. Nobody's from Unilever here, are they? But yeah, I think it's 150,000 employees they have. We're small in comparison. No, I think, and the other piece about when you've got a corporate venture capitalist involved, you need to be very clear, they need to be very clear when you're having that conversation with them about whether they should invest or not, is what exactly are you negotiating? Are you negotiating money for an equity investment alone, or are they going to sneak in some commercial terms as well along the back of that? So rights of first refusal or some other rights that you hadn't originally anticipated. Now, we will try our level best to keep our commercial guys away from those, and we will want for our money the same terms that you would expect from a financial investor. So you don't want to be faced with those down the track, I think. And the final piece is how they're going to behave as a board member. Again, there should be a Chinese wall. The best way to implement some of those things, so for example, if you're discussing exit valuations with, in my case, a key competitor might be DuPont, I shouldn't be in the room when you're discussing price. So I should recuse myself, I think is the expression, from the board meeting early. Please invite me back in when you finish the conversation.
So I think we have our first headline. Syngenta Ventures, watch out for corporate sneaking in.
But the other headline clearly is you can trust Syngenta and be careful of the others. And I believe you, Michael. Thousands wouldn't, but I believe you.
So Aram,
you know what? So just from us minions, the thing for the entrepreneur to remember is that our interests are most directly aligned because Our fund's goal is maximizing financial return. So with all due respect, and we have two strategics in our fund, so don't get me wrong, I think that there's definitely a critical role that they can play. But ultimately, the best entrepreneurs want to get the maximum win because it's in the nature of the entrepreneur to win. And so when you think about alignment of interest, we're seeking to find companies that can be multi-$100 million, if not billion-dollar wins. The strategics typically don't want to pay that price, and so you have to create competition for the maximum financial outcome. So it's a delicate balancing. I think it's a good example. When you're discussing exit values with competitors, there's going to be points where the conversation interests maybe misalign. But on the balance, I think why wouldn't you want a strategic player in there in terms of not just potentially acquisition propositions, but also thinking about the sort of diligence, the market access to regulatory expertise that they have. So, it's a balancing act. But I think ultimately, where the crunch comes is when you're looking at the exit point of their acquirers and you've got to figure out how to navigate that challenge.
So keep the microphone for a sec. It's not that easy. So you talked about strategic value and about your strategic LPs. Mm-hmm. So how does it work, and how is that providing strategic value to your portfolio companies?
Sure. So I think, as was sort of discussed, I think fundamentally it needs to be treated as a financial investment with strategic benefit to all parties. So if you have asymmetries where it's not benefiting the company, the fund, and the strategic partner, it becomes problematic. But there are certainly, I think, ways for that to be managed. One is that there shouldn't be any sort of form of special negotiation or rights on the part of our fund back to our strategic partners, and there aren't. The way I look at it is that the strategic partners we have got a window on many different technology companies. So we're looking, although we're a US-based fund, we find obviously many companies are coming to the US, as Adam was describing, looking to get a beachhead there. So we see deals from around the world, now including Israel. Our strategics get that benefit as well. But if they want to have a bilateral relationship with company X, because they think there's something they've got that could really be of value to their commercial enterprise, we encourage them to have that discussion without putting us in the middle. So we're not a gatekeeper, but neither are we promising them that they're going to get some special deal they haven't earned. The analogy I'd use in a way is that by working with us, they're on the front of the grid in this car race where, frankly, if they can't win from the front, they should get better drivers.
Talking about better drivers, I read a lot of research that says that women are much better investors. Here we are sitting, 6 men.
My wife wasn't available. Sorry.
I would have said 5 women in New Zealand.
Here we go. Of course, we have Nitsa. How do we get more women into this venturing sector?
Well, our team is actually quite diversified. We're actually 50% male, 50% female. I think it brings, not only sort of in terms of gender, I think we try to diversify the team in terms of nationalities, in terms of different cultures and so forth. Different backgrounds, different expertise. We just found that it brings so much more diversity and new perspectives. How do you get more? I think you just keep an open mind. I think the industry is definitely lacking diversity, both here as well as in the US, definitely.
So Jinesh, you sorry? Yeah. So that's why we like to have Australians and New Zealanders. Let's get over with that. So Jinesh, I think you mentioned one of the challenges is the adoption rate of technology. And Arama, you mentioned that a third of the farmers are above 68. I remember one of the presentations, I think it was CropX, that this older farmer trying to use technology. How are we going to manage that? How are we going to make sure that farmers are going to at the end use the technology, and that we not are just going to be extremely happy about what our company is doing, but at the end nobody's buying it?
So we've been conscious about this thing, right? I mean, forget about farmers. Everyone is having too much of information overload. I mean, beyond a point, it's just an information. We don't know what the heck we're going to do about that. And farmers are no exception, right? So any technology what we invest, we make it a point that let's give actionable points to the farmers. They are people very busy. They just don't have time. If you're going to give them a data dump and ask them to spend half of the day in front of a computer to analyze it, it's not going to work, right? You need to give them 5 or 6 items they need to do in next 24 hours or 48 hours. And that is what real conscious effort, when we invest in our technology, we look at saying that, can we make this foolproof? Can we just give action 5, 6 items that the farmer should do in the next 45 days? He should be 85, 90% right than what he could have done. That's his conscious do it. So we think, and when you do that, I think farmers would take that, right? If you give them 5 or 6 things to do it, they don't mind doing that. You give them 500 things to do and find out the 5 important things, it's a disaster.
And Aram, maybe going back to your experience, I mean, first of all, you were growing up on a farm. I think you've invested also in farms, so how do you see the connection between the farmers and the technology?
Well, on a lighthearted note, farmers will clearly engage in technology if the stakes are worth it. So apparently the fastest growing dating site in America is farmersonly.com. Who knew? I'm not on it, by the way. I'm not on it. But when you think about the application of technology on a serious note, I think Jinesh is exactly right. You've got to have, there's a big difference, but as Dror was touching on too, between data and knowledge, and between knowledge and intelligence. And so when we think about how we use data, for example, running a 50,000 acre plus dairy farming operation, the number of data points you need to look at that really make a difference to the farm's operation are actually very few. But figuring out which ones they are takes time, and then figuring out how to get that intelligence in front of the farmer and the decision maker, who, let's face it, most farmers are actually outside because they like being outside. They don't want to be inside looking at a computer screen. If they wanted a desk job, they could have got one of those. So I think simplicity, I think efficacy. So there are so many data technology solutions, for example, that promise the earth and don't deliver. And then risk. So, shelling out tens of thousands of dollars for a data solution that ultimately isn't usable and doesn't work is going to be a tough selling proposition, which is why IT into agriculture is littered with the wreckage of corpses along the side of the road.
I have a whole list of more questions, but maybe we'll stop for a couple of questions from the audience. Yes, please.
So I wanted to take off on what Steve, when he spoke at the very beginning, mentioned, was this issue around the valley of death. Both investor. The problem is not in the investments around 3 million, 5 million, any of them. And you didn't ask them, by the way, Gideon, what their investment sweet spot is.
By the way, what's your investment sweet spot?
Right, they'll do it as part of the answer. But it's the issues in the valley of death. It's the 250 to 500,000. It's the early stage companies after the seed stage investment or the friends and family that need to get to that next phase, which is somewhere between $500,000 and $2 million. And it just seems to be totally undeveloped in the ag tech area, unlike in medical devices and in software. And I would hope that your panelists could address that.
Okay. So before you address this, if I may, I think that specifically in Israel, it's a little bit the other way around. I mean, we have a couple of professional great incubators like NITSA, also the new Strauss incubator, Terra Fund. So there's quite some company available. Yeah.
I'm talking post-seed pre-A. I agree with you. It's the post-seed pre-A. That's the valley of death. And I'm an angel investor in Israel, so I see this a lot. I'm involved across almost 70 companies, okay? But I don't invest in ag tech. And part of this issue is how to really put together the right consortium of investors to do that. And we're having abandonment by the VCs in general in a lot of sectors, like enterprise software. But here, it's extraordinary. I don't see anything going on post the trend line initial investment type level that goes.
Adam, maybe you want to relate?
Yeah, sure.
Look, I think it's a common question in many markets, and it's actually applicable to several of the investment stages for food and agriculture tech. And that's also because there's no history of returns. Getting capital, even at the later venture capital stage, raising capital for our funds, it's a new investment theme. So it's an adjustment for them. And I can't give you a turnkey solution. I can say that the angel investors in California or the accelerators that I know that Finistere is looking at, I know that we're talking with various Dutch bodies that want to try to create fill the gap between university and when we would really kick in. So there are initiatives there, and that's not a satisfying answer, but there's also opportunity in that gap. And it's that opportunity that we have to leverage as a group here to actually help those companies through and for a while hopefully deliver good returns. And with good returns come better entrepreneurs, more investors, a bigger community. And that's the somewhat slow journey that unfortunately this sector is presently in at its stage. But it's an attractive journey because that is the opportunity that you're also describing, both at that stage and at the stage where, for example, Anterra steps in, which incidentally, to answer the other question is, look, our sweet spot would be 5 to 10 million. We would go down to about 2 million. Going below there is challenging with a fund structure and a fund size like ours.
And I am accepting your challenge, so your sweet spots as well, please.
So our sweet spot is single-digit million. We have gone very low, so we've gone as little as 100,000. Or was it 75,000? But it was low. And we have gone as high as 30 million. But definitely mid-single-digit million is our sweet spot. I think that it's sometimes referred to as the valley of death, and often there's this focus on the valley of death. So I have a slightly different take on this. So yes, we're trying to set up an incubator at the moment, but I think on the whole, financial investors have largely avoided because on a portfolio level, it doesn't return the money. I think the bigger question for Europe and perhaps Israel as well is not the specific valley of death. I think there is opportunity there. There are incubators. There is money. It's not easy to get for the reasons just been stated. I think the bigger question for Europe is where are the unicorns? So we're great at going university, technology spin-out, startup in England, for example, where I'm from. We're really, choose your own expletive, rubbish, let's say, at going from, instead of 0 to 10 employees, going from 10 to 1,000 employees. And my own personal take on that, I was asked by Nitz to be provocative, so I'm going to attempt to be provocative. My own personal take on this is that it's actually down to employment law. So we forget, for example, one of the famous unicorns from the US, Facebook, was started in Boston, but it jumped ship and went to California. I think it was because it's actually only possible to grow a unicorn at the pace at which you need to grow it in a hire and fire state, which has the relevant ecosystem. You're never going to do that in Switzerland, for example, because you just can't stand outside the hypothetical, proverbial, doesn't exist Google office and say, Guy, I need you to start tomorrow because I'm growing that quickly. And I can't wait 3 months for your notice period to be expired. Now, the challenge, of course, is as a politician, and I'm not, but if you were to take that away from employees in, so let's say, Switzerland, the UK, Europe, then the consequence would be that employees will be up in arms and the politician will be out on his ear. The downside, though, is from a long term, we don't grow big unicorns, which drives returns, it drives ecosystems, it drives reputations.
Dror, your sweet spot?
Yeah, and I want to just respond to that. So we invest as low as 100K and sort of as high as usually 5 million, but we sometimes do more. I actually think differently about it. I mean, especially if you look over the last few years, there's many new funding models that now enable you to sort of find new money, right? Anything from accelerators to, new crowdfunding models like AngelList, our crowd here, I guess, and many others. There is more transparency in the ecosystem. So if you have a good company, there is more ability today to sort of reach out and talk to many investors, right? So if you do have a great team, if you do have a great vision, you can do it maybe today much more than you could do it maybe 5 years ago. I do think, to your point, I think the reason you don't really see unicorns, the reason it's a tough industry if you compare it to many different IT industries, because while you have the ability to build big, impactful companies, it just takes longer, right? If you think about the distribution platforms that exist in many of the other industries, there is no Google Play Store, for agriculture companies. There is no iPhone App Store. There is no even Salesforce App Exchange. All of those things that allow companies in the IT space to scale much faster really don't exist here, right? So it's taking longer. I do exist that over the next few years, some of those specifically precision ag companies will grow to become one of those companies that sort of create the digital farm and enable the next set of companies to build on their infrastructure to reach out to those customers and basically scale in a non-linear way, like you would expect of a unicorn. So I don't think it's necessarily related to geography, and I'm from Silicon Valley. I do think it's related to not having the ability to really scale in a non-linear way that exists in many of the other industries, where you've seen a lot of marginal innovation over the last many years.
Just quickly, your sweet spots.
Sure. So we'll typically look to find deals that we can deploy as much as 15 million over the life of the company, with initial rounds down to $1 million, probably more typically in the $3 million range. As you touched on too, Gideon, we're also working on a accelerator solution at the moment because we see an immense amount of deal flow that really doesn't scale to a classic Series A venture model, but where there is an immense opportunity to do acceleration. And I think where you can also not only look to make a return from those investments done the right way, but also it sets up a proprietary pipeline for Series A investing, which would be the motivation for us beyond, you're quite right, typically incubators haven't made money, but then I think acceleration and incubation is not the same thing.
Hi. From our perspective, we work with incubators, so the seed rounds of $50,000, $100,000, $200,000 is done by then. Then we would typically put from $500,000 to $2 million in the Series A or the first round, and keep 2x or 3x of the money as a follow-on round, so that a larger investor will feel comfortable coming with us. So we treat this like a pattern race. I do to a last $4-5 million, but create a situation where guys putting $10-20 million will feel comfortable that we are staying along.
Let's maybe talk exits for a sec. One of the things we hear in our industry is that it's taking too long for investors. So I would like to hear a little bit about that. The other thing is of course, M&As versus IPOs. And maybe the third thing is that, especially for Israeli companies, they tend to be very much focused on NASDAQ. That's like the big dream. Do you think that in our industry, is that the right market? Are there other markets that companies should take a look at? When IPO, when M&A, at what stage can you IPO? A lot of questions, sorry for that, but just whatever you want to relate to. Maybe you want to start.
Sure. When at Omnivore, we don't look at IPO as an exit route. I mean, if all the portfolio companies available in India goes for an IPO, I think we require 2-3 stock exchanges. I mean, it's not going to happen. So we prefer to start working with strategic partners when the company is in the third year of its life. Start having a connect. What's happening? If the companies can go well, the strategic partner sees a value. We think there's a fair chance of getting an exit. So we think from our perspective, 50 to 60% of exits would come from that, and 30 to 40% exits would really come from large investors, PE players would come in. That's what we think around it. Hopefully there'll be a few burnouts as well.
Anyone else wants to relate to the exit?
Yeah, you're right. It's a complex set of questions. I think just historically, M&A has been the dominant mode. But as Adam touched on, the relative maturity of the space, it's, I think, still very early days. So this is, 8:30 in the morning. It's not 4:45 in the ag tech space. So I think, is there the potential for IPOs? Well, clearly, if you're looking at, the unicorn example, really companies that are going to be successful, that are going to have durable IPOs, are using those IPOs for growth, not for liquidity. So I think as venture investors, we have to be comfortable with the fact that particularly in ag tech, that's going to imply a longer exit cycle. And so we have to consider, is an M&A at a smaller number make sense now on a risk-adjusted basis, or does it make sense in the case of chasing $1 billion exit to stay the course?
And if IPO, what market, Dror?
If IPO, which market? I don't know if I have a good answer for that, to be honest. I don't have a lot of data that I can relate to sort of in where would be sort of the best place to IPO in this market.
Adam?
The volume of IPOs is so low that I don't think there is a great answer. But what I would say is that I do feel at both a corporate level, at a M&A in terms of bankers, and at a strategic level, be it McKinsey-type consultants advising wealth management asset managers, the interest is unequivocally increasing. And to give you just a few data points, we saw earlier today, lots of people quoted the data about how much more capital is going into this sector. There have been some significant exits. To then take it to the next level, I'm continually, especially in the last 8, 9 months, approached by big corporates who are looking at changing their innovation model or asking questions like, and this includes a partner that we talk regularly with, Arama and also Anterra, Bayer, saying with their off-site with their 60 best scientists, come and just talk about venture capital and how that sector works. Is the innovation model changing in crop science and ag inputs? ADM, same thing. Cargill, I'm not sure they really wanted to listen to our answer, but they asked us in for the question, right? And there's a series of big food and agriculture corporates that see that the innovation model might change. That's promising. And at a more micro level, we just did a funding round for a company that we put it in our own investment paper as being 3 years away from exit. And we've received 2 offers in the last 2 months. Now, we weren't expecting that company to be ready for a while, but 2 people have deemed that it was time, and that sort of surprise is going to make a difference in terms of both, obviously, the volume of exits, but also the number of entrepreneurs that find the sector attractive.
So one last round of 30-second questions, or rather 30-second answers, and we'll start with you, Michael. Because Adam said it earlier, Israelis are sometimes a little bit aggressive and beautiful and smart. So in a moment, you'll get off the stage, and then all these people will grab you and want to tell about their company. So what in 30 seconds, what do you want to hear from them when they grab you?
Okay, so 30 seconds, that's 5 and gone already. I want to hear how you're going to take your better mousetrap that you built, because Israel's filled with PhDs and engineers and life scientists and better mousetrap builders. How are you going to take it to market? Because I'm firmly of the view that the better mousetrap on its own won't be sufficient in all the noise that was being mentioned out there. Won't be sufficient to persuade, if it's the farmer or the big company or whoever it is, to buy it. So what's your sales and marketing plan? Who's going to be your first customer? When's that first dollar going to come in that will pay for whatever it is that you're providing?
I would like a strong, simple value proposition, and I would like a very clear explanation of the biggest risks, and to really knock me out with their deep understanding of those risks and how they're going to handle it.
So we're really investing in really amazing teams that are trying to change the world. So for me, it's all about the path to greatness. What's your really path to greatness? And specifically, if you think about the value position, what kind of value can you create for your customers, and how much of it can you capture? I think so. Going beyond technology, what kind of solution you're providing, and sort of how does this going to make money for your customer and for you?
A lot of good answers, or great answers already. I think I've just had a point, which is I'm really seeking to understand if the entrepreneur that's in front of you is the person that we can work with to, as Dror sort of put it, find that path to greatness, unlock that value proposition, find that path to market. Because at the end of the day, this is actually quite an artisanal business. You end up working very closely. You're not just giving people a check. Hopefully they're coming to you for the expertise, network, advice, mentorship, tough love you can bring. So, life's too short to work with jerks.
I think I completely agree with what Arama says, right? I mean, from our perspective is, we think that making the first innovation of the discovery is probably the easier part, right? How are you going to execute long term, and how are you going to go to the market with the right channel partners? I mean, that's where a lot of entrepreneurs misses out. I mean, they do great innovation, but how to take it to market is probably something is missing out. Yeah.
Great, thank you. So, Jinesh, Aram, Dror, Adam, Michael, thanks so much, not only for your insightful comments, but also for the fact that you all flew into Israel from far away to be with us. You've earned your frequent flyer miles well. So thank you very, very much.
Thank you.
Since I asked Michael to be provocative, I can't help myself, and I have to say a remark. Although I know that Gideon had very good attention, but the fact that you asked 5 distinguished gentlemen how you bring more women to the industry, this is a problematic attitude. We heard Pam, and we know that if somebody brought her to this industry, it was her mother. So, okay. for the last part of this amazing event. Before I will call Oded to announce the winning companies, I just want to thank again the audience that came really from Israel and from all over the world, really more than 15 countries from the US and China and South Africa and Australia and England. I can't mention all of them, but really thank you for your effort and your trust in our... And more than that, I would like you all to come and visit us in the Agritech during the coming 3 days. We have a booth there. We will be very happy to meet with you and continue our discussions. And last but not least, I would like to thank the Agrivest team, all of you, my dear people, Michal and Shira, Karen, Adi, Sarai, Debbie. You did an amazing job. Thank you so much. You made us look great. Thank you so much. Oded.
You find seeds that can be programmed to become whatever you wish. You engineer them to have limitless creativity. You plant them in soil designed to nourish them. They yield fruits of endless new inventions.
Okay, second place is bioefficiency. And the prize for you is 2 tickets to the Pioneer Festival in Vienna at the end of May. You will present your company there. Really? Yes. 2 tickets.
And the first prize is going to get 2 tickets for the Pioneer Festival in Vienna and $5,000 worth of advisory services from E&Y. Itai, thank you. And the winner is?
And the winner is Duma Talk.
אכלתי את העוגיות. כל הכבוד.
כן. Thank you so much. We'll see you next year again and again.